True.
Yeah. True. The way you fill out your W-4 determines how much your employer withholds from your pay. So Robert is a full-time life insurance salesperson with the statutory employee box checked on box 13 of his W-2. He has $575 in unreimbursed expenses. How will this be handled on his return? So we didn't really go into a lot of detail on statutory employee because of that being so rare. But he, as a statutory employee, you're kind of on the line between being an employee and being an independent contractor. So for income tax purposes, he's an independent contractor. But for payroll tax purposes, he's an employee, which means his Social Security and Medicare tax are already paid, already been withheld from his paycheck and remitted to the IRS. For income tax purposes, he can fill out a Schedule C, profit or loss from business. He'll put all of his income as gross revenue on a Schedule C, and we'll talk about Schedule C more in Chapter 11, I believe it is. This is what a Schedule C looks like. He'll put his, whatever is on his W-2, he'll put in instead as gross receipts from business, and then he'll be able to put his expenses here wherever it belongs, whether it could be supplies or travel, but he'll list his expenses here. So he gets that deduction for income tax purposes. And because his Social Security and Medicare tax is already paid, he would not be required to pay any self-employment tax. Because self-employment tax is Social Security and Medicare tax for people that are working for themselves. So that is a little unusual. Okay. So, short answer, essay question, why must tips totaling $20 or more be reported to your employer? Yeah, pretty much. Because that's what the law says. That's a good answer.
So the one before about Robert is just basically, it'll be filled out on Schedule C, that's how we handle it.
Yeah. Yep.
That on Schedule C. Oh, we can find that.
Yep. If he had no unreimbursed expenses, he would be able to just put it on line 1A as if it were wages. Let's see if we can find that. Okay, so this is statutory employee. That box will be checked. If you have qualifying unreimbursed expenses, then the income and expenses are reported on Schedule C, profit or loss from business. Okay, tips, $20 or more must be reported to the employer because that's taxable income. It's wages. It's supposed to go on your W-2. And your employer needs to withhold for income tax and Social Security and Medicare tax. And the employer is also supposed to pay their share of Social Security and Medicare tax. Okay, so here's a little scenario. Morgan is employed by Jackson and Associates Consulting. Her salary was $52,000. Morgan also received the following from her employer in the current year. So we're going to practice determining what's taxable and not. It belongs on a W-2, although realistically the employer, this would be the HR payroll department's job. Okay, so we have a California retreat worth $2,950 as a reward for exceeding her annual project management targets, but she was not able to take the retreat until February of the following year. Group health insurance premiums worth $3,600 and $2,500 as reimbursement for her conference attendance expenses. Morgan does not have to account to Jackson Associates for the reimbursements or return any unspent funds. Yeah. So which ones are going to be taxable to her this year? And it's going to be this reimbursement because that's under what we call a non-accountable plan. She doesn't have to account for the funds to her employer.
It would be the retreat as well.
The retreat would actually be.
Okay. The next one.
Mm-hmm. Let me double check that. Oh, no, you're right. The retreat is included because she earned it in 2023.
I was wondering because the employer for their tax.
Yeah, that brings us to a concept that might have been mentioned in the book called constructive receipt. So most taxpayers report income and pay tax on the cash basis, which is whenever you're paid. That's that year is the year you report the income. And then constructive receipt says if any money is, or in this case, a price or service is made available to you and that you can cash it out at any time, then that's considered paid to you, even if you don't take advantage of that until later. So if your employer hands you your last paycheck of the year on December 28th, but you don't cash it until January, you still got paid in December. So that's still going to be income. So yes, the retreat and the reimbursement are going to be included in her taxable wages. So how much are we going to find in box 1 of her W-2? Yeah. Yep, we all agree. 57,450. Okay, this homework, I encourage you to do this yourself as well, because you're going to actually be filling out part of a tax form. But for now, we'll read the scenario. We'll figure out who qualifies as his dependent and what his filing status is. So we have Mark Johnson. He's divorced. He maintains a home for himself and his daughter, Emma. Mark has signed Form 8332, allowing his ex-spouse to claim Emma as a dependent. Mark pays 70% of the total support for his widowed stepmother, Helen Carter, who does not live with him, and Helen's gross income was $2,500.
He's gonna have a nice return. Sorry.
Let's see. Except for the child tax credit and the other dependent credit, we actually have all the information we need to do a tax return. So why don't we go ahead and do this tax return. So in your workbook, you'll find blank tax forms if you look at, and it's sorted by chapter. So you should be able to find where it says chapter 4. And it should have Yeah, they're not numbered by pages. But you'll need, in order to do this tax return, you'll need a Form 1040. You'll need a Form 4137. And you probably need Schedule 2.
Which they have, they're all right there together.
Mm-hmm. Okay. The only thing that we haven't discussed in the class, well, they didn't even give you page 2 of the 1040. So just fill it. We'll just fill in page 1 of the 1040. You have all the information you need to get all the way down to taxable income. And then once you have that done, we'll go back and we'll finish page 2 together. What is his filing status? Head of household, right. Even though he signed the 8332 to allow the non-custodial parent to claim his daughter, he still gets to keep head of household filing status. In addition, he also gets to claim his stepmom. Yes. Okay. Because his stepmom also qualifies him for head of household, because remember, a parent does not have to live with you. We don't need to put his daughter's name on this line because he does have an actual dependent that is his qualifying person for head of household. So we're going to start off with his name, social security number, address, mark head of household, and list Helen. And even though we haven't got to it yet, we're going to check the box for other dependents because she's not a qualifying child. And then his total amount of wages from the W-2 is going to be $3,485 from the first W-2. And then the second W-2, I don't know if you noticed, but if you turn the page, there's another W-2 there. So we round that one up, $24,619. We get $28,104. His unreported tips came out to $38, $18 for February and $20 for April. So that has to be also added. And his total wage income is $28,142. Everything else, there's no other income, no adjustments. So we bring that down to total income on line 9 and adjusted gross income on line 11. His standard deduction is $20,800 for head of household, so his taxable income is $7,342. For the Form 4137, this is how we fill this out. Mark Johnson, Michelle's is the name of the bar he worked at. That's their employer identification number. His total tips includes the 320 that he did report and the 38 that he did not report. So his total tips is 358. That goes in column C. And his reported tips, the 320, goes in column D. And then the columns are totaled up. His only has one employer, so adding that up is easy. 358 for total tips received, 320 for total tips reported. The difference is 38, which it says goes on line 1C of the Form 1040, which I already did. But here on line 5, we have tips you received but didn't report because they were less than $20. So he's not required to pay any Social Security or Medicare tax on that small amount of tips. So 38 goes here again, and we end up with 0 tips subject to Medicare tax. And then if we add his stuff up again, we get $28,104 here. This $160,200 is there because once you reach that income threshold, you no longer pay any more Social Security tax. In this case, it won't matter. He'll end up having 0 tips subject to Social Security tax. 0 times line 10 is still 0. 0 times line 12 or line 6 is still 0. So he doesn't owe any additional tax. And technically, if we read the who must file instructions on Form 4137, it says if you received cash and charge tips of $20 or more in a calendar month and didn't report all those tips to your employer, you must file Form 4137. So he doesn't actually meet this requirement, so we could have left the 4137 off the return. So the 1040 is all he needs to file. So if we want to do the rest of the return, we'll look up 7,342 in the tax table, which is at the front of the workbook. Yes, 733 is his tax. He doesn't qualify for any credits, or this is actually extra taxes. Here, the benefit for having a dependent who's not a qualifying child is $500. So we'll just put a $500 other dependent credit for other dependents on line 19. Technically, we would have to fill out Schedule 8812, but we're not going to do that today until we get to the chapter on child tax credits. Yeah, I'll print this out when we're done. Okay, there's no Schedule 3 on his return, so his total credits is still only 500. Subtract line 21 from line 18 gives us total tax of 233. No additional taxes, so again, his total tax is 233. And then we would look at his withholding. I just lost my page.
Cannot see this graph right. 2,978.
Okay.
349. 3,327 total?
Yep. So we would put that 3,327 as his withholding, and no estimated payments, none of these. He probably actually would qualify for earned income credit because he has a qualifying child, so we can't actually finish this return yet until we've discussed earned income credit. But without the earned income credit, he would already have a refund of about $3,100. So earned income credit is what, chapter 8 probably. Yeah. So